Goodbye, August, and hello, September.
It's time to finish up filling out your trading journals for the last month, realize you weren't quite as disciplined as you should have been, and of course, this is the best time to promise yourself you're going to be better in the upcoming month, which really brings me to the premise of this video. I want to get you guys prepared for not only the next trading week, but for the entire trading month, because there are two major unknowns that you got to be paying attention to will have a huge influence on the market. And then with respect to stats, facts, and figures and all that nerdy type of stuff, there's one major known piece of information that suggests the bears might be coming to town. So of course, I want to be getting into all that, but before we do, if you enjoy these types of market breakdowns, it would truly help me out if you could like, subscribe, leave a comment. All that type of engagement gets this video in front of other people who might enjoy it. So obviously, thank you for all of that. With that being said, let's roll the tape. Alrighty, before we get to the pessimistic, bearish portion of this video, when in doubt, zoom out. Here's a look at the S&P 500, and it is looking mighty fine. Look at that trend. Higher highs, higher lows. That's beautiful. Above all the EMAs, last month up 1.2%. Year to date, we are in the green, up 9.5%. Clearly, especially ever since the May-June time period, we are looking really good in the S&P 500. If you take a look at the tech-heavy NASDAQ, a little bit different. Yes, higher highs, higher lows. Last month, green. Year to date, up almost 11%, actually outperforming the S&P 500. But a little bit recently, I'm starting to see our first potential lower high. And obviously, I want to pay attention to this low here to see if it ends up becoming a lower low. So watch this low. And actually, if you're watching NDX, specifically 23,000, maybe the high 22s, a little bit of change there. Pay attention to that, but looking a little bit rocky. On the flip side, small cap, looking beautiful, just like the S&P 500, higher highs, higher lows, ripping, and then actually Bitcoin kind of going the way of the NASDAQ, if anything, actually kind of leaning us lower, clearly now has lower highs and lower lows. But I should note, year to date, it is up 16%, so kind of outperforming the other things we've been paying attention to. So overall, things are looking pretty good. Generically, year to date, we are in the green across the board. We're seeing some good structures. Maybe there's a couple of things that are questionable, which brings up the fair question, is the month of September the time that we're actually going to take a turn, and maybe the bulls are going to pull their foot off the gas, and maybe the bears are going to start to show a little bit of their strength? Obviously, there's a lot of unknowns there, but to get a better idea of the what I like to refer to as the highest probability pathway of like what is the likelihood here, well, we got to dive into the major news on one side, but then stats on the other. So with respect to news, when we closed out not only the week, but also the month, stocks closed lower, but S&P 500 notches its fourth winning month in a row. Now, for my day traders, you know that we actually had some excitement when the market was getting going at 8:30 for the PCE inflation report. Yes, I'll be diving into that. So a little bit of bullishness. Then we puked for the first hour, and then we kind of did nothing for the rest of the day on the S&P 500, the NASDAQ. I'm seeing more red than anything else over here. But with respect to what was red and green, you can see from the heat map of the S&P 500, it was more tech specific, I guess also industrials, that was clearly bearish. And then the rest of the world actually kind of green. So depending on what sectors you do or don't like to trade, probably is very much painting your opinion on how Friday went. But the major news of Friday was the PCE inflation report, which is massively important because remember, right now, the big fight is, are we going to get a rate cut? And if so, how much? And also, how many rate cuts are we going to get for the remainder of this year? The big fight between Jerome Powell and obviously President Trump, hugely important because remember, when it comes to the Fed, dual mandate, price stability as it relates to inflation, and then also the job market. And this is going to be the last major inflation report that the Fed's getting before their upcoming decision in mid-September. So hugely important. And as you can see here, the numbers came in at expectation. So 2.6 versus 2.6, and then core taking out food and energy, 2.9 versus 2.9. So came in right at expectation, which is exactly why the initial pump was kind of good. It came out at 8:30 in the morning, an hour before the market opened. And then the fact that we got that quote unquote good news and we started to sell off doesn't necessarily give me the best feelings. Looking at the options flow throughout the day, this is the delta flow. For those of you who don't know what delta is, it's a measure of the bullishness and or bearishness in the options market. As it goes up and up and up, as you'd imagine, that is bullish, and then obviously down and down and down is bearish. So we kind of dumped that open with respect to the delta flow on the S&P 500, and then a little bit recovered into the end of the day, but not overly a strong trend. Looking at the Mag 7, the combination of Apple, Amazon, Google, Meta, Microsoft, Microsoft, Nvidia, and Tesla, this is concerning. It sold and sold and sold. And I should also bring out that the large guys across the entire New York Stock Exchange, they were not really aggressively selling, but they were definitely net sellers throughout the day. So a little bit concerned there with the overall New York Stock Exchange, and very concerned here with what in the world is going on with the Mag 7. Now, I know that we're getting very specific, obviously, with one-day price action, one-day options movement, and it's all because of the PCE report, but truly, it is that important. Stock market's fate comes down to the next 14 trading sessions. Basically, Bloomberg is saying, hey, every single trading session, data drop, and political development between now and the Fed rate decision at the FOMC meeting is gonna be massively impactful. And yes, it is. So that, just so everyone knows, is coming out September 17th. But before we get there, you should know that obviously market is closed Monday, September 1st, in observation of Labor Day. We're going to get some manufacturing numbers Tuesday. We're going to get some job numbers Wednesday, more PMI prices and all that good stuff on Thursday, ADP non-farm employment change. But another important one, we just got the PCE inflation report. Remember that dual mandate from the Fed where price stability, that's the inflation side. The other part of their dual mandate is going to be the jobs numbers and really the labor market. And we get the unemployment rate this Friday. So in terms of the two things they care about, mandate A, mandate B, the dual mandate, well, we just got one, and we saw, even though it was at expectations, the market dumped, they were looking for something better. Well, the other part of that is coming out this Friday. Those two things together are going to have a huge influence on this September 17th meeting, where as of right now, the market is pricing in an 86% probability of a 25 bips rate cut. We're currently sitting at 4.25%, 86% chance that we drop to 4%. So this is from the Fed Watch tool. If you look at the other form of betting markets, looking here at Polymarket, there's about an 81% chance of a 25 bips rate cut. Right now, I strongly believe that we are going to get a 25 bips rate cut, but it doesn't take much research, whether you're using AI or even a basic Google search, to see how the market reacts historically to that first 25 bips rate cut. Unfortunately, the odds do favor the bears. Now, obviously, we don't have that much data. It's not like you have hundreds and hundreds of data points on this. And yes, times are different of like, okay, what was going on with monetary policy? What was going on globally? Yeah, it's never going to be perfect. But I'm just saying generically, if you're looking at it from a 10,000 foot view of when you're getting that, once again, first rate cut, generally, the market doesn't really behave as bullishly as you might assume. And with respect to this specific cut, there's a lot of unknowns. Fed upheaval sows new uncertainty about path of rates. A September cut is likely, but the breadth of support and the path afterward are up in the air. So right now, it is more likely than not that yes, we will get a 25 bips rate cut, but there's a lot of unknowns, especially as it relates to what's coming afterwards, which is going to have a huge influence, obviously, on monetary policy, the economy, and thus the stock market. But don't forget, we're in the middle of this giant fight between the sitting president, President Trump, and also what's going on with the Fed, because right now he's trying to get a majority of Fed governors as he's actively trying to kick Lisa Cook out. So not only is there a lot of political pressure from the administration onto the Fed, but remember, the Fed is allegedly data-driven. So if this upcoming jobs number is actually a strong number, strong jobs, and higher than anticipated inflation, that's not good. The odds of these cuts might not be there. We might only get 25 or 50 this year. Now, obviously, on the flip side, if jobs start to weaken and ideally inflation comes down, then of course it's going to be the opposite case and the chance of rate cuts is really going to spike. So that's something you have to consider. But intertwined in all of that, remember, as it's going to relate to inflation, is what in the world is going on with this trade war. U.S. trading partners dazed and confused after tariff court loss. This was a crazy story to conclude the month of August. Trump tariffs that are voided by and ones that are safe from Friday's appeal court ruling. So apparently some of this trade stuff going on, some of the tariff stuff going on, the trade war, if you will, some of it ruled not really above board. The ruling on Friday from the U.S. Court of Appeals for the Federal Circuit throws a wrench in President Donald Trump's trade agenda and leaves his reciprocal tariffs in limbo. Trump has said that he will appeal the ruling to the U.S. Supreme Court. Trump's sector-specific tariffs, including on copper and steel, remain safe from the ruling, potentially foreshadowing a new trade playbook Trump could use if his reciprocal tariffs are blocked. So this is one of those huge unknowns. We don't know what in the world is going on with the Fed and rate cuts. And in terms of the trade war, now everyone is confused because can he do it? Can he not do it? Remember, the market hates uncertainty. Truly, if I could, I wish I had a magic ball that would tell me exactly exactly how this trade war was going to go, exactly how Fed policy was going to go. But these are the two giant unknowns that you got to be paying attention to because it's going to have a huge influence. And as of right now, I don't know anyone that knows exactly how it's going to break. But one thing that I can tell you that is certain based on actual data is the upcoming month, the month of September, generally does favor the bears. So looking at the past 20 years worth of information, you can see that for the S&P 500, it's kind of flat, then we pop, and then we drop. But once again, that's the last 20 years worth of information. Sometimes it might be helpful to see how things have played out more so recently. Over the past 5 years, you can see September is actually the most bearish month of them all, of the entire year. Over the past 3 years, information pretty much the same. September, the most bearish month. Now, if you want to look at the weekly, you can see those 4 months in a row, bearish, bearish, bearish. Same thing, past 3 years, bearish, 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 especially the third month of September. For whatever reason, the bears dominate. Now, obviously, just because something historically has been bearish, is that guarantee that it has to be bearish this time around? No, but there's also a point why when it comes to the world of trading, history doesn't often repeat, but it really does rhyme. So I want you to know exclusively from a seasonality standpoint with respect to the S&P 500, the month of September is not so good for the bulls and it is uniquely good for the bears. And it doesn't just stop at the S&P 500. Take a look at the NASDAQ. Since 1985, September is the only month with a negative average return for the NASDAQ 100. Not so much better for the small cap sector either. Wake the IWM bulls up when September ends. The index has a horrible track record in September with an average return of almost a drop of 2% over the last 25 years. So once again, these are just stats, facts, and figures. If you want to use them, use them. If you don't. Hey, whatever. I'm not your mom. I'm not in control of your money. But from just a pure math data standpoint, September is dominated by the bears. When I consider this historic performance, it does make me a little bit more concerned, especially about what I'm seeing in the NASDAQ here, where, it looks like maybe, just maybe, we've put in our first lower high. We're testing this trend line. What if it snaps and can't hold the 50 EMA? We're obviously already seeing weakness in Bitcoin right here, the blow off top, lower highs, lower lows, snapping these recent ones. Yes, small cap is looking good, but who knows? Is this the top? Am I going to be filming another video in a week or two and say, yeah, that was evidently the top? Same thing in the S&P 500. Overall, it is looking very strong. It just made a new all-time high. But are we going to be looking back at Thursday, August the 28th and be like, yeah, that was an evident one, especially as we have to not only deal with the bearish seasonality, but on top of that, the two major unknowns as it relates to obviously the Fed and the trade war. So those are the two unknowns you got to be paying attention to. Depending on how they do or don't break, it's going to obviously have a clear influence. But right now, just from what we do have, what is measurable, seasonality has me a little bit concerned, and it really does have me questioning, is this an all-time high? So on that note, I would love to get your thoughts and opinions in a comment below. Do you think that this is the all-time high and we're about to have a bit of a pullback and maybe later on we make a new all-time high? Or do you just think that I'm being a bit overly dramatic and who cares about seasonality anyway? But remember, maybe the best way to handle all of this is to not trade at all, and maybe we just get lucky with the lottery because apparently the numbers are huge. Powerball jackpot grows to 1.1 billion after no one won on Saturday. So if you're watching this and you happen to be the lucky winner, obviously a massive congrats to you, and you'll probably never have to worry about the stress of actively trading ever again in your entire life. Folks, that's what I have for you right now. As always, stick to your trading plan, respect your risk, and I'll catch you in the next one. Thanks for the good vibes.
Peace.